Hello and welcome everyone. This is Deanna Laird with Accounting Fly, and I'm excited to host our webinar session today on the importance of state and local tax collection and filing obligations. We're going to learn about a lot of things regarding this topic, including some of the key factors driving state tax law changes, updates to the old state tax administration to make it effective in the 21st century economy, increased state enforcement activity, the importance of the role of a state tax advisor, and also talk about some career opportunities in state and local tax. Before we get to those topics, though, I want to go over a few procedural items just to make sure that we can make the most effective use of this webinar session. And for that, I'd like to make sure that you're aware of the webinar toolbar. It's over on the right-hand side of your laptop screen or computer screen, or if you're on a mobile device, it may be at the bottom. But make sure you're aware of this tool because this is where you're going to ask your questions. In this toolbar, there's a questions section. And in that section, you can type in whatever questions you have. And we definitely encourage you to ask what's on your mind. We'll hold a Q&A session at the end of what our talking section, but I encourage you to type in the questions whenever they pop in your mind. You may have something that comes to mind the first 5 minutes. Go ahead and type that question in. I'll file it, even though we won't start to answer them towards the end of the session. Okay. Also, if you happen to have audio problems and you're listening through your computer or your tablet, you do have a phone option, which sometimes is a bit more reliable. So if you need to have an audio solution, there is also an audio section in that toolkit. And if you expand it, you'll see a phone number and a kind of passcode that you can use that to dial in via your phone. Okay? Now, before I introduce our speakers, we'd like to learn just a little bit about you so that we can understand you as an audience and perhaps adapt some of our discussion depending on this. So I'm going to launch a poll, and hopefully you see that now. And we'd like to see what is your level of experience. Either you're an experienced accountant with more than 5 years of experience, or maybe you have experience, but it's 2 to 5 years. Perhaps you're an entry-level accountant, starting out your career, early career as I call it, with experience level up to 2 years. Maybe you're still in school. And so notate it if you are after you've already completed your undergraduate degree and maybe you're at the master's or PhD degree level. Or you can note if you're in your undergraduate program. Okay? So go ahead and type that in so that we can see. And I'm going to close it in 3 seconds. Okay, here we go. So this is, really interesting. A fair distribution, certainly a small majority of entry-level experience, so that's great. But I'm excited to see a nice dispersion across all different levels. So that's terrific. So thank you very much for that poll. There you can, I think, see the results now. We also have a second poll that I'm going to go ahead and launch here. And this is also about your experience, but in direct relationship to how much working experience you have with state and local tax issues. You can see the answer options there, minimal or no experience, and essentially that means you pay your sales tax and you file your own state income tax return. You might have a few years of experience, 1 to 3 years, medium ground experience, 3 to 5 years, so you may be quite experienced with over 5 years. So if you'll go ahead and let us know how much experience you have specifically in state and local tax, that would be great. Okay. So interesting to know that the majority, well, 45%, the highest percentage of our audience, this is a new area for you, minimal or no experience. A fair number, 35% with some experience, 1 to 3 years of experience in state and local tax, so that's great. And then 20% with 3 to 5 years. And interestingly, no one in our audience currently has over 5 years of considerable of experience in this area. All right, so that's really great to know. Appreciate your input on that. And I think that will be helpful for us on staging the conversation. So with that, I'm going to let you know who our guests are today. And we have Bob Heller and Lizzie Rum from Clark Nuber, which Clark Nuber is the 6th largest public accounting firm in the Seattle metropolitan region. And they cover a broad range of expertise at their firm. And they've been named a top 100 accounting firm. So a terrific firm joining us here today with some really great expertise. And of course, our concentration today is their expertise in state and local tax. Bob is the perfect person for this. He is the shareholder in charge of the firm's state and local tax practice. He has extensive experience in Washington state, multi-state, and state tax controversy client matters. Bob provides services to clients in manufacturing, high-tech, life sciences, real estate, e-commerce, and other industries, so quite a broad portfolio there. Having also served as the Senior Assistant Director for Tax Policy at the Washington Department of Revenue, Bob brings a unique perspective to tax consulting. He earned his BBA at Boise State University, his JD at the University of Idaho College of Law, and his LLM at NYU, New York University School of Law. So some impressive credentials there, Bob, and happy to have you here with us. Lizzie is joining us well, and she'll join in particularly around the Q&A section. And she is a human resources manager at Clark Nuber, and her mission is to continue to recruit top talent for the firm and assist current staff in realizing their full potential. So she's really interested in the employee aspect of things, including from recruitment through development and employee success. She, along with the Senior Director of HR, is responsible for that recruiting, performance management, and a variety of other HR projects supporting the firm's initiatives. And like I mentioned, she will join in to help answer some of your questions that may be related to employment and career opportunities in state and local tax. So I know you're going to find what they have to say very interesting. And I want to encourage you that, if you find a particular, passion about this and just a really nice fit, you need to check out their state and local tax senior manager position that we have open right now. I'm going to send that link to you here in the chat window. So check it out and, see what kind of opportunities they have and see if you may be a fit for that. Okay? And with that, Bob, it's your turn, and the floor is yours.
Well, thank you, Deanna. It's really my pleasure to be speaking today about something that's one of my passions, obviously my chosen profession, and that's state and local tax, and really a topic that is relevant to any business that is either engaged in a multi-state business or is considering expanding beyond its original state borders. And so before we get into the topic, I just want to say a few things about Clark Nuber. As Deanna mentioned, we have been ranked by Accounting Today magazine among the top 100 accounting firms in the country. And that's ranking by revenue. And we're number 96. And we think the reason we've been able to do this is the first time in our 60-plus year history that we've made the top 100 list. But it's really because we've been able to achieve consistent organic growth over a sustained time period. And it's very important to us that we've achieved our goal of remaining an independent firm in the face of considerable industry consolidation. There are a number of last year's top 100 firms that are no longer on the list, because they've merged into even larger organizations. So it's an important cultural aspect of Clark Nuber that one of our goals is to maintain our independence and continue to be an independent firm. As this slide indicates, we were founded in 1952, so we are 63 years old. We're based in Bellevue, Washington. We have only one office with 180 plus employees. Our client mix is made up in kind of equal parts of privately held companies, not-for-profit organizations, and high net worth individuals. And we provide a broad range of financial and accounting and tax consulting services to our clients. And what we think makes us different from other firms of our size is that we'd like to think of ourselves as having big firm expertise, but with a small firm culture. Our audit and tax practices are roughly of equal size. We have a diverse client base. No one client makes up more than 2% of our revenue. And so while other firms of similar sizes were encountering significant business challenges during the Great Recession, we were able to withstand that without any significant decline in revenue or in personnel because our client base is so diverse. We have a nationally recognized not-for-profit practice. Our not-for-profit practice is the author of the CCH 990 book. And the 990 is an IRS form for reporting the activities of tax-exempt organizations. We also are working on a private foundation treatise comparable to our 990 book that would address the IRS 990 form or the IRS form 990 PF for private foundation, and that will also be published by CCH. And the members of our not-for-profit practice regularly speak at national conferences and serve on national policy boards. And I'll say just a little bit about our SALT practice. Our firm, for our size, it's quite rare to have a SALT practice with 5 people devoted full-time to SALT with the depth and breadth of the expertise that we possess. So we believe we really bring something kind of unique to the marketplace by having this expertise. So before we get into the topic here, I wanted to give you all a test. I don't know if you were planning on doing math at this time in the morning, but as you can see by the picture there, I want us to be able to prepare to cross over into the state tax zone. State taxes are unique, they're challenging, they can be complex, and so it's always important, I think, for anyone embarking on a discussion of state tax to make sure that we're all on the same page and of the same mind. So I have a little exercise here for us, and so I'd like you to pick a number from 1 to 10 and make note of it. Then I'd like you to take that number and multiply it by 9. So if you have your number, then if the number is a 2-digit number, then add them together. So for example, if you selected number 10 and you multiply it by 9, you'd have 90. That would be a 9 and a 0. You'd add them together and you'd have a 9. Then I'd like you to subtract 5 from that number. Now, this is where it gets a little more complicated. So think of the letter in the alphabet that corresponds to the number. That is the result of selecting your number, multiplying it by 9, and then adding the 2 digits together and then subtracting 5. So take the result and then pick the letter in the alphabet that corresponds to the number. Now I'd like you to think of the name of a state that starts with this letter. Now I'd like you to think of the name and color of a circus animal that starts with the second letter in that state's name. So this is going to determine whether or not we're all on the same page and ready to embark on our discussion of state and local tax. So if you if your animal was a gray elephant in Delaware, then you can consider yourself tuned in and appropriately calibrated for this discussion. So Deanna mentioned our agenda this morning. I'm going to talk about 6 topics, all in the state and local tax area. And the first is, why do we care? What the increasing importance of state and local tax. Then we're going to talk about the key factors in the states driving state tax law changes. Then we're going to talk about 20th century approaches to state tax administration in our 21st century economy. We're going to talk about increased state enforcement activity. We're going to talk about the importance of the role of a state tax advisor. And finally, we're going to talk about what the career opportunities are in state and local tax. So why do we care? Why are state and local taxes of increasing importance? Well, the first and foremost is that state and local taxes are becoming one of the most significant areas of expense for a multi-state business. That's in part due to the fact that state and local taxes can be highly complex, and the complexity comes from a couple of different ways. One is that we're dealing with a multiple of different jurisdictions. So just at state sales tax alone across the United States, there are more than 4,500 different taxing jurisdictions for sales taxes. You add to that other forms of tax that states impose, the state income or franchise or business activity taxes on top of that, and you can see that it quickly becomes quite complicated. And of course, there are different rules in each of the jurisdictions that you might be doing business in. So one of the aspects of the expense to multi-state business of complying with state and local laws is that the cost of compliance is quite high. If you're filing tax returns, having to take into consideration all the different rules in the various jurisdictions, the cost of preparing those returns can be quite significant. And then, of course, the tax burden itself that comes from complying with the state and local tax laws is often quite significant. And so, particularly when you think about the sales taxes, if you're in a state that imposes a sales tax, we could be paying sales taxes on purchase of taxable items up to 10% of the selling price of that item. So it can be quite significant. The other thing that makes this important is we have a rapidly shifting regulatory landscape, and of course that adds to the complexity. One thing I'll say about the regulatory landscape in state and local tax is that we're dealing with either local ordinances or state laws, or we're dealing with the interpretive authority that the various jurisdictions have that help taxpayers understand how the rules are supposed to work. And that interpretive authority can take several forms. It can be regulations that are adopted by a tax administrator. They can be letter rulings. They can be published decisions for contested administrative appeals. And then, of course, we have judicial authority. Taxpayers, as you might guess, often disagree with tax administrators, and that frequently leads to litigation. And so there are court cases that are available to us to help us understand what the regulatory landscape in a particular jurisdiction looks like. The other thing, and I'll spend some time later in the presentation talking about this, is that uncollected sales taxes can impose significant burdens on multi-state business. If you're doing business in multiple states and you should be collecting sales taxes and you do not, you can be liable for them. And when you're talking about tax rates of up to 10% of the gross selling price of the thing you sell, you can see how the liabilities would quickly mount up. And then, of course, states are becoming increasingly aggressive in going after out-of-state businesses. And then finally, unresolved state and local tax liabilities create some significant issues and can complicate merger and acquisition transactions, because oftentimes the buyer of a business will become a successor to the liabilities of the company that they're purchasing, even if they're buying assets. And so often tax due diligence and mergers and acquisitions involve a great deal of attention paid to state and local taxes. So key factors driving state tax law changes. Well, this will not come as a surprise to anyone. If you've been reading the paper and following what's been going on in the states over the last several years, that the principal factor driving state tax law changes is state and local budget shortfalls. You know, the need to generate additional revenue. There are growing expenditures on public goods and services. You've probably heard about the need to improve our states, our states and our countries' transportation infrastructure. Well, this is typically a cost that is shared by the federal and state governments, but it falls heavily on the states. And then in terms of expenditures on services, one of the single biggest budget drivers for states is what's called the Medicaid caseload. And this is a federal mandate, partially funded by the federal government, to provide Medicaid social insurance benefits to the poor and disadvantaged citizens of the various states, and that can have a very unpredictable and significant negative impact on state budgets. And you can see in the diagram historically, you know, how significant these budget shortfalls have become. And so this is a significant driver in state tax policy. Other causes of declining revenue, of course, lower levels of economic growth. So the Great Recession was a big influence on that. And the principal driver there, of course, is that when you have less economic activity going on, then you have less, your tax base is smaller. So corporate income taxes and consumption taxes, like sales or use taxes, are very, very sensitive to economic downturns. The same thing can be true of the property tax. As home values and industrial property values are declining, that also shrinks the property tax base. Another type of shrinking tax base that the states have experienced is just in technological advancements. If you have a sales tax in your state and it is taxing primarily sales of tangible personal property, the evolution from the physical world to the digital world for various forms of entertainment content, software, and other types of services that have occurred in the physical world are now moving into a digital environment, and the state tax laws are just not very well equipped to capture those transactions in this evolution from the physical world to the digital world. And then finally, a key factor, and this is a significant one driving state tax law changes, is the political realities of how do you raise taxes in an environment when you have poor economic performance and you have a shrinking tax base and the voters don't want to pay more taxes.
Bob?
And so this is the art of taxation. And yes.
Bob, sorry to interrupt, but one of our audience members astutely, recognized that, I think, are you intending to be on a slide, your slide about key factors driving state tax laws changes? The audience is currently still seeing increasing importance of state and local taxes slide.
Okay, well, I've advanced the slide. Are you not seeing my screen, or is it frozen?
I'm seeing I am seeing your screen. It is still on increasing importance of state and local taxes. Okay, there we go.
Well,
it's corrected now.
Is it advancing now?
Yes, it is. Key factors driving state. Thank you. I think we're good.
Okay. Okay. Now I'm advancing the slide to the political realities. You should see a picture of Jean-Baptiste Colbert.
That's it. We're there.
Okay, very good. So as I was saying, one of the biggest factors influencing state tax law changes is a desire on the part of legislators to raise taxes, but to do so in a way that doesn't result in them losing their jobs. And one of the most attractive sources of revenue to state tax legislators are out-of-state companies, companies that do not vote. And so you'll see in many of the legislative enactments that states are engaging in are really directed at out-of-state companies. So that brings us to the next slide, 20th century approaches in the 21st century economy. And so my first point is nexus is not a hair product. So this concept of nexus is a term that's used in state and local tax to describe the connection between an out-of-state taxpayer and the state that seeks to tax them. And so the U.S. Constitution requires that there be some significant connection or nexus between the out-of-state company or the business and the state that's seeking to tax them. And the U.S. Supreme Court decided in a case entitled Quill versus North Dakota that in order for a state to require an out-of-state company to collect that state's use tax or sales tax, the company must have a physical presence in the state. And this has been an area of increasing controversy since this case was decided back in 1992. The states have become more and more aggressive in how they interpret this idea of physical presence. The first thing to fall by the wayside since this case was decided, since it involved the issue of a company's duty to collect sales or use tax, was that the state said that case applies only to sales or use tax and not to income tax. So as a result of that, states have enacted income tax provisions that require out-of-state companies to pay tax if they have some level of economic activity in the state, even though they may never set foot in the state. And so this is a way in which the legislatures have eroded this idea of some kind of physical presence being necessary in order to be subject to tax. Now, under the Quill case and under the U.S. Constitution, in order to impose a sales or use tax collection obligation on an out-of-state company, the state of the law is that there still needs to be a physical presence. But one of the ways that the states have become much more aggressive in interpreting the physical presence requirement, particularly over out-of-state internet sellers of products, for example, Amazon.com. States have enacted what's called click-through nexus legislation. And what those laws provide is that if an out-of-state internet retailer has a relationship with a person in the taxing state, where that person puts a link on their website through which a person visiting that website can go to the retailer's website and purchase a product, and the person that places the link on their website receives a commission for that purchase, then if there's more than a certain level of transactions through those kinds of activities within the state, then that, under these state laws, is sufficient to create a duty on the part of the remote seller to collect the retail sales tax in that state. And these laws are referred to colloquially as the Amazon click-through nexus legislation, because it was principally enacted by various states, the first of which was New York, to try and cause Amazon to have a tax collection obligation. And then another area that is significant is in the evolution of the digital economy, and I made some mention of that earlier in terms of the shrinking tax base because of products and services that have gone from a physical environment where the laws would tax them to the digital environment where the laws aren't really very practical and the coverage of the laws aren't adequate to tax those kinds of transactions. And among those are a few of the types of transactions I mentioned. You know, is it a sale of software, or is it the delivery of a service if it occurs in an electronic environment? Are we dealing with remote access software? I'm sure you all remember going to various software stores to buy software in a box. Well, that just doesn't really happen anymore. I mean, I think you can still do it, but I'll bet that the CD or that you get in the disk is actually just going to, you know, use your browser to go to a remote server to access the service, and there may not be really any software to speak of on that CD. It's just a channel through which an electronic transaction takes place. And then, of course, the emergence of cloud computing, which is essentially the infrastructure or the software or the platform for the IT function of a business being migrated into a remote location and running from servers and access through the internet. And so all of these things are having an impact on the state tax policy making, and it's influencing how the states administer their taxes and creating a significant amount of uncertainty for businesses in terms of how they're to be taxed. And then, of course, we're seeing a lot of increased state enforcement activity. This is just one more example of getting out-of-state taxpayers to pay more tax. And because out-of-state taxpayers don't vote, the states are very aggressive in seeking revenue from out-of-state businesses. And one of the ways in which they do that is they've got whole teams of people that do research on the internet and through other sources, looking for companies that may have a taxable presence in the state. And then one of the principal information gathering tools that they use is a questionnaire that asks about the business activity or the nexus elements that might be present. And so our clients get these often from states around the country. And Washington is quite active in this regard as well. It probably wouldn't surprise you to know that states have information sharing agreements both with the federal government, the IRS, and with other states. And so to the extent that the federal government is auditing a taxpayer or another state is auditing a taxpayer and they learn information about a taxpayer that maybe have liabilities in other states, then that information is then available under these information sharing agreements to be made available to states who are looking for non-compliant taxpayers. And then another way that states learn about out-of-state taxpayers is that they audit those out-of-state taxpayers' customers in the taxing state. And so an auditor may be looking at a particular business located in the auditor's state and noticing that that business is doing business with an out-of-state business. And they'll gather that information and send a nexus questionnaire. There's also something called a data mining or data soft matching programs. One way I see that my clients create footfalls in this area often is they'll put an employee in a particular state and then they'll register with the employment agencies in that state. So perhaps the agency that administers the unemployment insurance program or workers' compensation program, but they'll fail to register with the state revenue departments. And it's very easy for the revenue departments to get a download of all the registered taxpayers that are filing employment tax returns and say, well, you have an employee here, why aren't you paying tax to our state? You know, whether it's an income tax or collecting sales tax or any one of the other taxes that states might administer. Another common way for states to find out about out-of-state taxpayers is through trade shows. States are regularly crawling the internet looking for information that's on the website about the kinds of businesses that businesses engage in, the kind of business activities they engage in, and where they engage in those activities. Companies are often quite ready from a marketing perspective to say lots of things about where they do business and how close they are to their customers, and that's a ready source of information for states. And then finally, the Multi-State Tax Commission, which is an organization made up of various member states who've agreed to band together for a variety of reasons, but one is to conduct joint audits of taxpayers that do business in the member states, and that's also a way in which states are increasing their activity. So, having talked about the importance of state and local tax to multi-state business, I want to shift the focus of the conversation to the importance of the role of state tax advisor. And you know, just repeating the point that was made earlier, no doubt you can appreciate that state and local tax laws and regulations are complex and changing rapidly. And so it's important to have someone with the expertise to be able to focus on and keep track of these various changes and to understand the finer points of how these laws interact. And that's a very key point as well, is that when you have a client that's doing business in, say, 20 or 30 different states, because each state's laws are different, there could be opportunities in the way the business is organized to take advantage of the differences among the various states, or the differences among the various states can have a compounding effect so that the cumulative burden of paying tax in all those states makes the sum of the parts greater than the whole. And so having someone who has some expertise in helping navigate these complexities is very important. The other thing is, and this is becoming a very key consideration for multi-state businesses, is the financial risk that is created for a multi-state business. And as I mentioned earlier, if you've got a sales tax that you should be collecting that's upwards of 10% of the sales price of the products you sell into the state, you can see how that a liability can quickly add up to a point where we've had situations where if a client was liable for the uncollected taxes, that it could create a solvency problem for the business. And so these can be very significant. And as I mentioned before, a state tax advisor can play a critical role in helping clients navigate this very complex landscape. And it's both not only understanding the risks and the exposures to tax, to perhaps mitigating those exposures once they've been identified, or to help the business organize itself or conduct business in such a way that it avoids these problems, or takes advantage of opportunities. And what we've found is particularly in the middle market, so anywhere from emerging companies to companies up to $100 million in sales, often don't have the internal resources. They may have a tax person, but they often don't have a state tax person, and so they'll look to external consultants to help them with these issues. And then career opportunities, finally, in state and local tax. It's probably not a surprise to anyone that, like all tax specialties, I noted here international tax as an example, the opportunities in state and local tax continue to grow. The firms are always looking for people to add state tax resources to their practices. And one thing I'd like to mention too is that there are several subspecialties in state and local tax. This area is becoming so complicated that you'll, for example, have people who specialize only in multi-state, state, and most multi-state sales and use tax, or people who will specialize in multi-state income franchise or business activity taxes, or people who specialize in property tax, or state tax incentives, or employment taxes. And so there are a variety of subspecialties that are highly valued in this area. And then thinking about potential employers. Of course, public accounting firms or other advisors like boutique or specialty advisory firms. There are a number of those who do nothing but state and local tax. And then, of course, industry. So many industries have very complicated business profiles from a state and local tax perspective, and have very, very robust state and local tax groups within their tax department. And I also didn't mention, but it's also worthy of note, that the government is an employer, obviously, of state and local tax people. They're looking for policymakers, they're looking for taxpayer service people, and they're looking for auditors. The typical career trajectory for anybody seeking to enter into this field, you would start in an entry or journey level position. If in a public accounting firm, you'd start as an associate or a tax staff. And then after several years, you would advance to a senior, and then on up to the various management levels within the firm. Typically, that would be a manager, senior manager, and then perhaps a non-equity executive like a principal or an executive director, and then of course a shareholder or partner. for anyone who comes to me asking me advice about becoming a state tax professional, my advice is to develop some diversity in your career, starting out broadly, perhaps including federal income tax, and then as you are exposed to more and more state tax issues, eventually to decide would you select a subspecialty like sales or use tax or income franchise tax, but as your career advances, you've collected more and more experiences that make you a more valuable state tax consultant if you've been exposed to a variety of different types of taxes and have exposure to income tax as well. And then there are a variety of professional qualifications in this area that we see commonly. One, of course, is being a certified public accountant. It's also quite common for people with their law degrees to go into state tax. And while there are state tax practices in law firms, I would say by and large most of the state tax practitioners who are JDs are going to either work in a boutique or specialty advisory firm or in a public accounting firm, because there are plenty of opportunities for people with JDs or advanced degrees like in tax, like the Master of Laws in Tax or LLM. And then finally, I just want to say something here before wrapping up and turning it over for questions. There is something called the Certified Member of Institute, and it is a professional certification in state tax that's conferred by the Institute for Professionals in Taxation. And I'd encourage anybody that has some interest in the field to check out their website, and I believe it is www.ipt.org, and you'll learn more about that organization and what it offers for people who have an interest in practicing or practice in the state and local tax profession, and what the professional certifications are that they offer. So anyway, with that, thank you very much, and I guess at this point we'll turn it over for questions.
Great. Thanks so much, Bob. So, okay, everybody, make sure you submit your questions that you have. Again, that can be in the question panel. And I have a few here to start us off with. So going back to your comment and the fact that there are so many changes in this area, right? What do you recommend as the best way to try to stay up to date with all the changes and the latest regulations?
Well, I use a couple of resources, Deanna. That's an excellent question. There are a number of industry resources through a variety of publishers, CCH, Thomson Reuters, BNA, or Bureau of National Affairs, all publish or provide subscriptions to daily, weekly, monthly, quarterly publications that detail by state what's going on in the states. And one of the ones I like to use, there is something called State Tax Notes. It's published by a publishing company called Tax Analysts, and I get it on my desktop every day, and it tells me by state what's going on. And it usually has some editorial content. People are writing articles about how things are changing in the state and local tax area, what some of the emerging issues are. The other thing is that with these research tools, you can often go in and have them send you to your desktop as frequently as you want. I think as often perhaps as daily. What the updates are that they post in various subject matter areas that you're interested in. So there's a way to manage how you stay abreast and how you access these technical research resources. The other thing I do is I speak frequently, and so that's a reason for me to stay abreast of things. But I also go to presentations. I attend webinars. I go to live continuing professional education. There are a number of very, very high quality tax conferences around the country. New York University puts on several dealing with the topic of state and local taxes. There's the Hartman Institute, which is at Vanderbilt University in Nashville, Tennessee. Georgetown has a conference every year. So there are lots of resources and lots of ways for the state tax professional to stay abreast of changes.
Great. Okay. Okay. So we have a request that of getting a link for the source that you get updates from daily. And what I'll suggest is at the close of this webinar, Bob, if you can send that to me, and then I'll send it out to everybody so that you will have that that link and that good resource. Okay.
Okay. Very good.
Terrific. Someone is asking about the enrolled agent. You mentioned it briefly, and I think, curious about your thoughts on it, the enrolled agent designation. And let me throw in there too, it just has a broader view on the qualifications, and mentioning the CMI, CPA. If someone knows they want to go into tax, do you recommend the EA and the CPA and the CMI, or perhaps a concentration in one over other qualification options?
Well, okay. Well, so I'll address the enrolled agent question very quickly, and then I'll respond to the second question about the professional designations or licenses. So the enrolled agent is a test that's administered by the Internal Revenue Service, I believe, Department of Treasury, and it is a test that you take so that you become enrolled as a person with the right amount of proficiency to deal with federal income tax. And so it is a good designation to have, and I think in many firms it's required at least to be an enrolled agent to sign a tax return. And so, but it is not something that's specific to state and local tax. Of course, the CPA is not specific to state and local tax, nor is a JD. But any one of those, including the enrolled agent, could be a designation that somebody holds to practice in this area. The uniqueness of the CMI, or Certified Member of the Institute designation, is that it is a good housekeeping seal of approval, if that means anything to this audience. I may be dating myself, but it is an indication that the member who holds the certification possesses the minimum qualifications established by the Institute for Professionals of Taxation to be a specialist in state and local tax. And they actually offer a CMI in sales use tax, they offer one in property tax, and they offer one in income franchise tax. So they do cover those three subspecialties in the state and local tax area. I will say one thing about CPA, JD, enrolled agent, and CMI. Most of the public accounting firms, and I would say this is true of all of the big four firms, all of the national firms, and all of the regional firms, and then it would be true of our firm as well, is in order to advance beyond the level of the senior to manager, you have to possess some professional qualification, some certification. Most firms will say that you need to either be a CPA, a JD, or if you're a SALT person, a CMI. Other firms will insist that you either be a JD or a CPA. And there would be reasons why you might want to possess some combination of those, and that those would be, again, you'd want to have perhaps you might want a CMI even though you're a JD, or a CPA, to just denote your specialty in state and local tax.
Okay, terrific. Thanks. So, someone's asking, how do you get involved at the entry level? You talked a little bit about kind of career path growth. and of course, knowledge, specialty knowledge is important. But what's the best way to start if you're an entry-level type candidate in gearing your career towards state and local tax?
Yeah, I'd recommend a couple of things. If you're a college student and you're a member of Beta Alpha Psi, or that's available to you, I think that organization may have a group of people who are interested in state and local tax, who are interacting with firms at the recruiting level, looking for people interested in working in the state and local tax arena. The other area, I'm a member of the board of directors of the Washington State Society of CPAs, and we have a very active young professional and student membership classifications where there are networking opportunities. And that's often a good way to connect yourself to people who are working in the field to get some exposure and to indicate your interest. Another thing that I would encourage, and I do this regularly, is reach out to firms who have people who specialize in state and local tax and offer to take them out to coffee and just do some informational interviewing. I do a lot of this kind of thing, and I like doing it because, one, I can kind of see what's going on, in the potential pool of candidates, and what's going on at the academy, so to speak, and then I can also, it's amazing how much information I can gather from sitting and having coffee with someone who's talking to other professionals in the area. So I think you'll find that. Well, one thing I always tell people who work in our practice at lower levels is that the kind of consulting that we do as financial and tax advisors, it is fundamentally an apprenticeship business, and so it's fundamentally a relationship business, and so I can't discount the value of networking. And so I think to the extent that you can connect yourself to a local Institute for Professionals in Taxation chapter, I think they might have maybe even a student or affiliate membership available. You can maybe go to some of the luncheon meetings of the local chapter. They're very informative, and you can get to know people in the local state and local tax community. Or you can just reach out to professionals. I think they're more than willing to share their experiences and to give you ideas about how to enhance your career in this area.
Okay, great. We have a question here that relates, I think, directly about Clark Nuber and your location. And it's been asked, does working in Washington allow for more opportunities of working with different clients, or does it create new difficulties due to the time difference?
So, well, I'm assuming, given that last piece of the question, is if somebody were to be working, say, from a remote location for Clark Nuber. We do have people who, a small handful of people who work from their home in locations around the country. And it does pose some logistical challenges. We have a person who works in Buffalo, New York, and they're 3 hours different from us. And so they can get to work a little earlier than us and get some things done in the morning, but usually they have to be available later in the evening because our workday ends when it's later on the East Coast. But these are all things that one would have to think about in terms of their work-life balance and how flexible they're willing to be in terms of serving the local clients. I would say that the challenge is less of a time zone one as it is sort of a geographic one. At an entry level, there are two things that is a challenge for someone working in a remote location. One is this integration into the firm, and even though we have great technology, there's nothing that is a replacement for face-to-face interaction. Really getting to know people, sitting across the table and understanding who your coworkers are, who are the members on your team, and having them get to know you, because it'll really enhance your ability to for people to cross-sell your services and get you involved in things if they've laid eyes on you. And so, that's a challenge that we're dealing with and emerging, for people who work remotely. The other is the same kind of issue, but with the clients. But that's in many ways less of an issue. Our clients seem quite willing to have people participate by telephone or by video conference, and so that's less of a challenge. But I'd say that our experience and the most successful experience we have are people who are here who, for a variety of reasons, want or need to live in a different part of the country and come from here and move to another location in the country, because it kind of addresses those two issues. They already have relationships within the firm, and they likely also have relationships with our existing clients.
Okay, great. So on the subspecialties topic, you mentioned, there are several of them, but are there any that are particularly robust or maybe perhaps, from your opinion, lead to, more career opportunities?
Well, I would say that sales and use tax is a really big area, and there are lots of boutique firms that do state sales and use tax consulting. Income franchise tax is also one, but it's one that is less important in our state because we don't have a state income tax. Now, we have lots of clients that pay other states' income taxes, but if you were to look across the population of state tax consultants in the state of Washington, you'd find far more people who are familiar with Washington's tax system and multi-state sales use taxes in general than you would find highly qualified multi-state income franchise tax people. So a lot of that's going to be driven by the geography where you're located. Are you in a state with a very complicated income franchise tax system, like a state of California or Illinois or New York? You're going to see a lot more income tax people, and there are going to be a lot more opportunities for income tax people in those states.
Terrific. Okay. We have a couple of questions. However, we only have time for one more that I'll pose to you. And to those who didn't get their question answered, I will connect with Bob and Lizzie afterwards, and I'll give them your questions, and we'll get answers back to you. Okay, so rest assured that we will get answers for you. But I want to wrap it up with this one question, and it kind of goes back to what you talked about a couple of questions ago. The opportunities and Clark Nuber opportunities and where you're at, and essentially the question is, what are currently your key opportunities you're focusing on at Clark Nuber?
That's a very good question. In terms of opportunities, so I assume that what's meant by that is, what are the kinds of issues we're dealing with? What are the kind of most significant challenges our clients face? And I will say, to tie it into the presentation, that one of the key considerations for our clients who are in a multi-state business, particularly in the technology space. So they're providing software as a service, or they're providing some kind of a cloud-based service. Do they understand how the individual states where they have a taxable presence are treating their product or their service? I would say this is a rapidly changing environment. I would say, most middle market type companies in this space do not have a good understanding of whether their product or service is taxable and whether they should be collecting sales tax from their customers. And if you look at the if you spend any time reading the articles that other writers in the field are publishing, you'll see a lot of it is about the uncertainty in this cloud-based service and software delivery environment we're in.
Okay, wonderful. We're a couple minutes past the hour, so I would like to close out the webinar. I'll give you a chance for just a couple of closing remarks. But I do want to thank you so much for giving us this. I found it very interesting and a new area for me. And those of you who have listened in, thanks for joining us and spending this last hour with us. I hope you got a lot out of this. I think it was detailed and information packed. So Bob, Lizzie, appreciate you being with us. Thanks for your expertise.
Thank you so much, Deanna. I really appreciate the opportunity to be with you this afternoon.
My pleasure. All right, everybody, take care. As always, you'll get a copy or a link to this recording. Share it with your colleagues, your friends that you think would be really interested in learning about this area. And other than that, have a great remainder of the day.